Applied Digital is officially one of the most dangerous stocks in the AI sector right now. It just finished a legendary 2025 as a top performing internet service stock, but the bears are betting big on a crash. We're looking at over 30% short interest ratio and a CEO cashing out $6 million in shares and a $16 billion lease pipeline that could either make early investors rich or leave them holding the bag. Is this the ultimate short squeeze setup or a bull trap? Let's dive into the data. Now, before we break down the short interest, I have a massive goal for this community. If we hit 500 likes on this video, I will drop a dedicated 1-hour business analysis looking at Applied Digital's AI Superfactory blueprints and the potential for S&P 500 inclusion. Now, if we hit 500 likes, I'll also drop deep dives on Endural and Applied Digital this weekend. So smash that like button right now and comment Applied Digital 2026 to help us hit that goal. Now, the potential for a short squeeze here is a high risk yet high rewarding situation driven by these three critical factors. First of all, we have a 30% short interest ratio, as over 30% of the public float is currently sold short. This is massive as it indicates extreme bearish sentiment, but it also means that there are millions of potential buyers who will be forced to cover if the price rips higher. As well, if we look at the days to cover ratio, it is still sitting at 3.2 days, and while that does sound low in a high volatility event, liquidity can dry up instantly, forcing the shorts to pay any price to exit their positions. And we also have to consider the high beta volatility, as Applied Digital has a high beta, meaning that it moves much faster than the overall market. These rapid swings are exactly what triggers a panic buying characteristic of a true squeeze. Now, you may be asking yourself, why are the shorts so worried? Well, it's the $16 billion in lease revenue that Applied Digital has secured for the next 15 years. Applied Digital is shifting from construction to operations. They are building AI superfactories capable of rack densities of over 100 kilowatts, far beyond traditional data centers. They also just secured a $5 billion lease with a US-based investment-grade hyperscaler for their Polaris Forge 2 campus. Now, these facilities are designed for liquid-cooled architecture, achieving a power usage effectiveness of 1.18, which is the holy grail for AI workloads. But if the tech is so good, why are the bears still here? Well, on January 16th, the CEO Wes Cummins sold $6 million worth of stock at around $36 per share. While he still owns millions of shares, insider selling at these levels often signals that leadership thinks the valuation might be stretched. So now that we've encountered the most important news, let's look at the chart to see the immense potential that Applied Digital has over the next couple of months. So we see here that the next earnings report is around 109 days. They recently had their earnings here, which they beat by a nice margin, a little bit above 40% here, both on the EPS and the revenue side. We do see that their average volume is coming in line with the average 30 days. They're still valued at around $10 billion per share here. If you look at their earnings graph, they have been beating the analyst estimates each time, but we're starting to see a little bit of a downward curl, which may be a little bit of a warning sign for longer term investors here. But now if we look at the income statement, we are seeing a decline here in the net income, which is maybe why the stock has been kind of seeing this selling pressure at these important high levels. But looking at the performance year to date, it's up 47%. That's really good. And over the past 6 months, it's up 236% here. Now, most technicals are saying that it's a buy, with analyst ratings coming in at a 1-year price target of around $48 per share, which would be a 29% upside from the current price levels. But I believe that this stock has potential for even more. So looking here at my reasoning, we do see a currently a little bit of a decline here from the high that we formed around $39. But if we use important levels like, let's say, anchored VWAP from, let's say, important highs, so we'll factor in this high as well as we'll factor in this prior high that was formed here on the 16th of August here, we are well above both of these indicators. So what this means here is that the sellers, they got short, but now they're losing money. So we have the buyers fully in control, obviously, as long as we remain above this anchored VWAP, these two levels, right? So they are in control, and this is very nice to see here. And what we can even do here is that the exact moment to go long was actually at this price level right here when we got above this level of resistance, this anchored VWAP. So what we can do here to kind of gauge this momentum of the trend is to use an anchored VWAP now from that initiation of the uptrend. So we'll do that. We'll change it to green to signalize the buyers, and that is where we have been holding each and every single pullback. So we pulled back here on January 7th on the day of earnings, and then we saw a big bump, and then we declined. We saw nice accumulation here, a lot of buyers around this zone here most recently, and that's where we're looking to actually bounce off here and looking to go towards new highs. Currently we may be finding the short-term resistance at this swing high anchored VWAP, this resistance, and exactly that's where we're finding that overall resistance, but the stock is looking quite well. If you look here at my top right of the screen, we do have our trend algorithm here, which is saying that we do have a 100% probability of the buyers winning in this situation. The conviction is high as we have the 5-minute trend being bullish, as a 1-hour trend as well being detected as bullish. So I do like this name here on the long term. Now my price target here initially is going to be $52 here on Apply Digital. This is going to be, like I said, my first price target, so we'll write that down here. First price target is going to be exactly at this level right here. And then my second price target on Apply Digital is going to be even higher, towards $73 here. And the reasoning is going to be because if we look at the extended move from the decline that we had here most recently from the high on Apply Digital, which is going to be exactly, we'll say this one, the most important high, because prior to that we were trending quite nicely from the lows of $12, etc., to a high of $39, and this is where we've been kind of seeing declining, and this was the most important high. So what we'll do is we'll use Fibonacci retracements to kind of gauge from what percentage of the move have we completed so far from that high. So we'll look at this level, we'll plot it from the low that was formed to the support from November of 2025 here, and we'll use that level there. So currently we see we did pull back to the 23%, which usually is a very good indication of a strong initiation of an upward trend. And we do see that the first level is going to be towards here, so around $53, and our second price target here towards $75, which would imply here, like I said, from the current price levels, a move of around 100% here on Apply Digital, which is what I am really certain about. I believe that the stock can achieve that level. Maybe we'll see over the next couple of trading sessions would be the following. So now that we broke above this, we'll probably see that, we'll probably see a retest, etc., continuing higher highs, higher low momentum, and this initiation would trigger, and we'll probably see it kind of rotate towards $52. We can take our first price target, take off half of the position exactly at this level, and then we can sell off and try to find support at even lower levels. But a precise entry would probably be a break above here, so probably around this zone here, when we do see that trend structure finally start to materialize. Now if we do see maybe short-term selling from the high, we'll say from this example here, so we'll probably undo a little bit of these movements here, but let's say here's some sellers, right, and we may see short-term pullback, so we'll probably see some selling if this is a bearish case like this. Probably find a little bit of buyers here. If we don't find support here and continue towards the upside like that, then probably what we'll see is even a further decline back towards the level here of our prior resistance, and this would be where a lot of buyers, I believe, would be found, because it would now act as a level of support. So we'll probably see some undertaking here, some undercutting, find that higher high momentum, higher low, and then start to trigger towards the upside. So it would be a very nice area to go long. We would see that higher low momentum, so we would like to see like this, the higher high, higher low momentum like this. That would trigger some buying. Stop loss placement would be placed around here, around this general low of $29, and an entry would be at around the break of the resistance, so around $31, or even if there's a pullback, maybe towards $32 here, and it can be held even towards the highs here short term of $39. So that would be the bearish case here scenario, if the selling pressure from here is too much to withstand here from the buyers. But generally I still remain my longer term price conviction based on my trend algorithm here of around $52 here per share, and my final second price target towards $74 per share here on Applied Digital. Overall, Applied Digital is a definition of a battleground stock. You have institutional bears on one side betting on a fundamental collapse, and on the other the retail bulls betting on an AI infrastructure explosion. If we manage to get one more hyperscaler contract announcement, we could see those 30% shorts scramble for the exit. The question for you is, are you loading the dip, or is the CEO's $6 million sale a sign for you to get out? If you guys enjoyed this video, feel free to subscribe to the channel, give this video a like, hit subscribe, and remember, don't let the markets whip you guys out. I'll see you guys on the next one.